So back here on the Duncan Duo Show, joined by Mike Corrigan with Cross Country Mortgage, I'm Andrew Duncan. If you're out there struggling with your credit, or maybe your credit score is a little low, or it needs some slight improvements, so that you can move forward with purchasing a home, or maybe it's that you want to refinance an auto loan, or whatever it is, there's some simple things you can do to improve your credit score, and things that happen pretty quickly. If it's 15 or 20 point difference, man, it can mean a big difference. Sometimes 5 point difference. I mean, all these types of things could have a huge impact on your credit score. So one of the best ways is paying your bills on time, but another one is paying down your credit card balance. If you have credit card balance, pay it off, pay it down. That obviously the debt to income ratio comes into play.
Well, and while the credit bureaus are never going to tell us their exact algorithm that is out there, they will tell you that keeping your balance at 30% of the limit or below is where you're going to maximize your credit score that's going to be there. So if you have a $10,000 limit, if you can carry your balance at $3,000 or underneath, that's going to give you the most advantageous. And so simply paying it down to that can help boost your score.
Your payment history and utilization rate typically account 60 to 70% of your credit score. So positive credit behaviors improve your score after a few billing cycles. So those are things. If you missed a payment, your score could rebound. So get back on track. Sometimes if you miss a payment and it does hit your credit, a lot of the creditors will sometimes have a one-time grace where they may remove it. So there are some steps you can take depending on the creditor and the type of product. There are some times where they can remove that and kind of rectify it where it almost kind of goes off. I remember maybe 5 or 6 years ago we had moved and we had a credit card provider that didn't. Even though we changed our billing address and our mailing address, they kept mailing bills to the old property, and we missed a payment and went past that 30 days. Now, fortunately, we had documentation that it was their fault. They knew that they messed up and mailed it to the wrong address, so it got corrected, and the negative credit part went off of our report. But nonetheless, that is something that sometimes, even if it isn't something that was their fault, sometimes they will, out of grace, help you.
Right, and the credit score takes into account things happen over the course of time. What you don't want to do is consistently have it happening. So if you do miss a payment, you do go 30 days late, do your best to double up that payment, get back on track, and get current and that sort of thing. Don't say, oh, okay, well, I've been 1 month late, so now I'll just pay my regular payment there, and then it looks like there's a late payment every single month.
Correct.
And that it happens a lot.
Check your credit report, dispute any errors. A lot of times the errors, medical billing is one that's pretty common, but a lot of times those errors drag your score down. It's a mistake, it's something wrong, it's somebody opened up a credit card in your name, somebody tried to steal your identity. There's all kinds of things like that you have to work on documenting, but when you can provide documentation and dispute those, that can help your score.
Yeah, especially out there if you have a common name. So people that, if your name's John Smith, right, lots of times things can get mixed up and there can be errors there. So really pay attention if you have a common name.
Stop applying for credit. Hard inquiries hurt your credit. If you're wanting to buy a house, don't go out and look at loans for furniture and cars and clothes. We had somebody not long ago that went and got a loan for a freaking purse. They went and got a loan for a purse.
Not the time.
Yeah, no. So what's more important than buying a house? I mean, that's where you're going to spend the most money on interest rates and where you need your credit the most. So wait until after you accomplish that before you go out with any ancillary, pulling of credit. Now, one thing to say though, however, you can shop rates on products with different providers, and it'll get lumped in.
Correct. So the credit reporting agencies will tell you, they'll give you a 21-day window where whatever category it is, so in this case, if you're shopping for a mortgage, if you could go get your credit pulled by 100 mortgage companies, and it all is considered one inquiry at that time. But like you said, if you have one mortgage, and then you go to Macy's and get a car there, and then you go get your tires fixed, and then wherever else, you can apply for a credit card, a purse, or whatever, and it's all these different things that's going to hit every single time.
And my thing is that I get that a lot of people have to have they have to have a loan for their mortgage, or they have to have a loan for their car. Those are big expenses. Not everyone has that kind of cash laying around. I completely get that. However, when it comes to small, personal ancillary type purchases, in my opinion, like, furniture, like shoes, like, service on your car, those are types of things that, in my opinion, you just should never finance. If you don't have the money for them, then you just don't do them. And that's just my financial upbringing. That's my belief system. So they're to each his own. But I think a lot of people get themselves in trouble because they say, oh, 0% interest, and they don't pay it, and balloons to 24% interest.
Right. Well, and the terms on a lot of those things are usually much higher interest rates, and they pull you in with teaser rates that get over the course of time, and then something
then all of a
happens
sudden
in
you're
life,
getting killed.
right?
Yep.
And now you're buried in debt.
So have the money to don't do it unless you really have the money. Last but not least, this is a special ninja trick that we have here on the Duncan Duo Show. We give you a ninja trick. Ask a relative or friend who's got good credit to add you as an authorized user.
Absolutely.
So there's risk with that. As the person who would be adding you as an authorized user, I'm now accepting risk that you could go out and charge you up a bunch of money. But there is, for example, our daughter is authorized users because we're helping her establish credit. So there are a lot of people that do that with family members. So you got to know the family member really trusts you. The family member, of course, can add you as an authorized user, have the card shipped to their house, and cut it up. Well, then you don't ever have a chance to use it, but you're getting the benefit of the credit.
Absolutely,
stuff.
and if somebody's had a card, like if you go to one of your parents and they've had a card for 20 years, a lot of them had the same Amex card for the last 20 years. As soon as they add you on as the authorized user, you get credit for that entire 20 years once it pops up on yours, and that's where.
Here's the downside, though. If they start having financial problems,
you're
getting the downside.
Too, right?
So just keep that in mind if you do the authorized user thing. But that is the thing that a lot of people do to help improve scores. I've even seen people do that. They're in the process of buying a home. Their score isn't great. They don't have much credit, but they got good income, and their score just is really almost irrelevant. Right. And then their parents do that, and 6 months later they're golden. They're ready to buy. So.